stories begin right here, and we never write them alone. Sometimes we write them with someone who puts our story first. Other times with someone who puts their own story first. There'll be pages we love to read again and again, and some we'll barely remember. Sometimes we feel like the hero of our story, and other times, not. There are stories of dreamers, stories of creators, stories of strivers, stories of believers, and we're inspired by them all. That's why we invite you to write your story with us. Your story matters. Our stories begin right here, and we never write them alone. Sometimes we write them with someone who puts our story first. Other times with someone who puts their own story first. There'll be pages we love to read again and again, and some we'll barely remember. Sometimes we feel like the hero of our story, and other times, not. There are stories of dreamers, stories of creators, stories of strivers, stories of believers, and we're inspired by them all. That's why we invite you to write your story with us. Your story matters. Our stories begin right here, and we never write them alone. Sometimes we write them with someone who puts our story first. Other times with someone who puts their own story first. There'll be pages we love to read again and again, and some we'll barely remember. Sometimes we feel like the hero of our story.
or it's a user problem. A very good morning to all of you on this 18th day of March 2024. As always, we are very pleased to have you here. We hope you've grabbed some breakfast. We are here for the results announcement and investor briefing for the year 2023. That's the year beginning January 1st to December 31st of 2023. The results are for Absa Bank of Kenya PLC, just good so that we know you're in the right function. We'll be starting in a minute. Before we formally kick off, I just want to take this moment and again welcome you all. Feel at home. We look forward to engaging with you through this session. We are joined by an online audience on some of our... Yes, Kamau is our Chief Digital and Operations Officer. Next to Julius is Shera Waithaka. You obviously know Shera Waithaka is our Chief Risk Officer. Next to Shera is Ken. Ken Kanyarati is our Legal and Compliance Director. Then you've got Mr. Agin. James Agin is our Managing Principal running our Corporate and Investment Banking. And you've got Sharon. Sharon Ingari is our Chief Internal Auditor. Then you've got Ruth. Ruth Kamegere is our Chief Operations Officer. And then you've got Stella. Stella Mambo is Director for Global Markets. Now that we know the leadership in the room, by the way, there are many other bankers within your tables. Talk to them. They might just open for you a fantastic account this morning. But before we get into the presentations, I just want to call your attention to the screens so that we can tell you really what Absa is about. The team at the control desk.
Our stories begin right here, and we never write them alone. Sometimes we write them with someone who puts our story first. Other times with someone who puts their own story first. There'll be pages we love to read again and again, and some we'll barely remember. Sometimes we feel like the hero of our story, and other times, not. There are stories of dreamers, stories of creators, stories of strivers, stories of believers, and we're inspired by them all. That's why we invite you to write your story with us. Your story matters.
Indeed, at Absa, we say and truly believe that every story matters. We are here today to share our story with you, and we hope that we can engage and see how we can jointly continue writing a story of success together. At this point, I'd like to invite our chairman, Chairman Charles Moshene, to come and make a few remarks.
Good morning, ladies and gentlemen. I'm really delighted to be here this morning and extend my words of welcome to you as well, to all the analysts that we've got here, the investors, representatives of shareholders, colleagues in the bank, and all those who have joined us online. Year 2023. But before we get to that, I'll say just a few introductory words and probably start off by expressing our words of appreciation to customers and colleagues for the trust and faith that they have in us and in our business, because that is the bedrock of the success of this institution. And what you see presented to you this morning is the outcome of that trust. So thank you very much indeed. 2023 was an eventful year. There are many things that happened. But one of the outstanding landmarks and achievements in 2023 was the way that this business went through a seamless leadership transition. From November 2022 to the end of April 2023, we were in transition, looking for a new captain for the business. But the management team that was in place then, led by Yusuf, made sure that the business continued on its growth trajectory into 2023 and continued firing in all engines until the new captain was on board. And even after he came on board, they made sure that he was comfortable, that he fitted in and steered the ship from there on. So thank you very much, management team, for the great work that you did in that space. At Absa, everything starts and ends with our purpose. And you have seen our purpose there on the screen. It's about empowering Africa's tomorrow together, one story at a time. That is the North Star that defines and directs our thoughts and our actions. So when we talk about empowering, it's about making resources available to customers, colleagues, communities, and so on. Just knowledge, financial resources, and anything else that we think will come in handy to help them make better decisions and wiser decisions that will help them achieve their objectives and their aspirations. And it's about tomorrow, because once we empower them today and the actions are well informed, it will make their tomorrow better than their today. And collectively, it will make our tomorrow that much better. It's about working together, recognizing that we don't just sit out there and push products to customers. We've got to work with them and make sure that we have suitable solutions for every situation. But also we've got to make sure that we move with the times. And in this day and age, working with others, collaborating with others in partnerships delivers much better results and have much bigger impact. So really working together with customers and other businesses in the environment, we are working for greater impact. And it's all about stories, and you've seen the video there, which talks about each person having their own unique stories that address their aspirations. So that's what drives us. And our strategy is a roadmap that helps us achieve the objectives of living to a purpose. It helps us bring our purpose to life. Talking about strategy, we have a 5-year strategy, and 2023 was the first year of our ambitious 5-year strategy that seeks to build on the successes that we had in the previous strategy horizon. And this strategy is designed to deliver on growth. And this growth has got to be greater than market so that we win market share. And when we talk about growth, we're not just talking about any growth. We are talking about growth that is inclusive, that is responsible, that is sustainable, and that is profitable. And those are sort of guiding stars and guardrails that help us determine where our growth should come from. So when we talk about it being inclusive, we're talking about bringing in previously excluded or previously underweight demographics, like the SMEs, like the youth, like women-led businesses. It also talks about finding products and solutions in areas where we've been underweight. For example, bank assurance, asset management, Timiza, and other digital offerings. When we talk about it being sustainable, it's to do with making sure that we get the loyalty of our customers through exemplary service delivery and customer experience. And that ensures that we continue providing them with existing solutions and even new solutions. When you talk about responsible growth, we are talking about us being part of a much bigger community, and we have to behave responsibly, make sure that we do not leave communities in debt, that we support them, and that we support ongoing global initiatives by providing climate-related funding that will help in the preservation of the environment. And when we talk about profitable growth, it's got to be growth that delivers the expectations of the shareholders who have entrusted us with their billions of capital. And we also appreciate that to deliver on that growth, we've got to make investments in all the areas that matter, and we've got to be choiceful as to where those investments go. And some of the distribution channels that we've got, digitally enabled channels would be one key area, because that would help us not only enhance customer service and customer experience, but we'll also reach out the demographics that I talked about that we've not reached previously, and give our customers choices. We've got to invest in the talent that we need for the future of this business. We've got to look for them and grow them and protect them and make sure that they are all well and taken care of. And so the strategy seeks to make Absa the home of talent. And then we've got a brand that we would want the market to have affinity with and to love and to be proud to be associated with. So we've got to make those investments. So those are the strands of our strategy. But having a good strategy is one thing. Implementation is another. And the key to success lies in the rigor and the speed of implementation. So the business continues to focus very much on relentless implementation of that strategy. And the taste of the pudding is in the eating, as they say, and in this case, it's in the outcomes that we get. So this morning, you're going to see the outcomes of the first year of implementation of that strategy. And management will be unpacking that to you, but if I could make a comment on that, at the board, we are very pleased with the outcomes for this year. It's in line with the strategy and the aspirations, and you can see the results of the efforts that have gone in. We're pleased that the top line has grown in the high teens, and the newer service offerings that I talked about earlier have shown really good growth, and that's a base for future growth. We've seen the balance sheet growing in high teens as well, so the capacity of the business is growing. You will see that we have continued to invest significantly in those areas that I referred to around technology and around our people and the brand. But even with the increase in the total investment, you'll find that the cost-to-income ratio, which is a measure of efficiency, is below 40%. And we're really proud that we've been able to make investments and return efficiencies. And I'm sure the investors will be pleased with the return on equity, because that's a measure of how much has been generated by the business. When it comes to other areas, for example, in sustainability, you'll see that we have disbursed 22 billion shillings in climate-related financing in the area of green energy, green construction, smart agriculture, and so on. So you see that across the span of the business, communities, and environment, there have been significant investments and disbursements, and hence the results will be there for one to see. So that gives you a flavor of what management is going to unpack for you. But let me just say that we are really proud of the things we are doing around the brand and the people. You see, for example, we are supporting our people with wellness programs and all sorts of activities that make sure that they are focused on delivering what has been entrusted to them. Looking ahead, we are optimistic that the future, our tomorrow, will be better than our today, because we are laying the foundation for that tomorrow. And we are agile enough to be able to respond to the challenges that might come our way. Talking about challenges, when you get the results, you will see that impairments have gone up significantly because of the developments in the macroeconomic environment, but also informed by the businesses' risk management approach, which requires us to be conservative, but management will expound more on that. So we expect that we will continue to write some really exciting stories into the future. And that's probably a cue for me to stop there and leave it to the chief storytellers in the business to tell the rest of the story of the performance of the business in 2023. Thank you very much.
Such poise and finesse, don't you agree? Please give another round of applause for our chairman. I think without keeping you any much further, we'll invite to this podium our managing director, Abdi Mohammed, to kick off the presentations. Abdi will just hand over to Yusuf, and we'll just come back here during time for the Q&A. Abdi.
Right. Thank you. Thank you very much. Thank you, Chairman. I hope this works and it's not having any user issues. The Chairman of Absa Kenya, Mr. Charles Mshene, our customers, investors, stakeholders, members of the media, my colleagues from Absa, invited guests, ladies and gentlemen, good morning, everybody. I hope you've had a good breakfast. For those who may not be fasting, and I hope you are enjoying the morning. So what we'll do over the next maybe 15, 20 minutes is to go through the strategic execution. I think the chairman referred to execution and what has been done, what has been delivered, and how well we are doing against the plans that we set out for the year 2023. I'll take you through that, and then I'll invite Yusuf to cover the numbers, which, as you know, are just outcomes. The numbers are results of a lot of initiatives and actions that we take, we execute in the business. So very quickly, if I may, just try and move this. There you go. I would like to first quickly revisit our overall strategy. I think the chair covered some of the key pillars that we shared last year that inform our 5-year strategy, anchored on three critical pillars around building the consumer franchise, building a world-leading business banking franchise, and also the corporate and investment banking side, maintaining leadership in that space, regionalizing the business, and ensuring that we are taking the benefit of the full business ecosystems that drive the corporate banking space. These three pillars are then enabled by, of course, a strong brand asset, and I think the chair alluded to that earlier when he was speaking, as well as the talent and the people that work within this organization, and we'll say quite a bit about that, and running a digitally enabled business. Those are the three key enablers. Now, if you look at the year 2023, a lot has been achieved in each of those pillars, and we've just taken a few of the headlines there on the slide. In the consumer bank, reorganizing ourselves into the segments and value streams that drive that segment, ensuring that we have products and solutions that are targeted at the consumer bank, that are just wider than banking and going into financial services. And I think the chairman spoke earlier about the insurance business, which is showing significant double-digit growth. We are doing a lot more in the digital lending space, and that part of the business is growing in the 40s in terms of percentage points. And we are seeing a lot more focus on distribution and the distribution network. You know, at 85 branches, we feel there is still a lot of room to grow the branch network. You would have seen our recent launches. We just did Nairobi, Isli, BBS Mall. We'll be doing a few more Nairobi branches. We are opening a branch in Eldoret as well. And we see that continuing, driven by the needs in the market. But it's also not just about branches. It's also about the wider distribution strategy. Agency banking is one of the areas that we focused on to support the overall SME and retail strategy. And in the next few weeks, you will see further action in that space that significantly increases the distribution points that we have. So the consumer bank has been very busy, very active, and you will see in the numbers how that is translating. We are looking at the business banking side as well, and this is the core segment that drives this economy. The SMEs, the local businesses that are a significant part of the GDP of our country. And there's a lot of work going on in terms of the solutions that we provide in that space as well. You'll have seen some of the work we do in SME, in the commercial segment, in asset-based finance, Islamic banking, where we are one of the big players and one of the leaders in that market. And on the corporate banking side, we continue to execute the regional strategy, invest in technology that allows customers to transact with ease, both in the area of trade and trade finance, but also basic transaction banking, collections and payments as well. And there we also have some of the great work going on the enablers. In the digital space, we are seeing more and more customers using self-service channels. Our digitally active customers increased by 25% in the year 2023, which is a significant increase. We are seeing self-service transactions in the high 90s. 98% is as good as it gets in terms of transactions that are outside the branch network. There will still be those conversations and transactions that clients want to have that can only be done face-to-face. Big decisions around taking a mortgage, doing an investment, etc. And the idea is to ensure we are leaving time for those high-quality conversations as we migrate the more operational transactions into the digital space. So a lot of good work there. On the brand and the work that we've done in the branding side, again, good progress for a 4-year-old brand. You know, it's just about 4 years since we launched in Kenya. Our brand awareness and recognition is in the 90s. 9 out of 10 Kenyans recognizes the brand, understands what we do. There is another score called brand consideration, those people who want to do business with us. Again, that number doubled in 2023 because of some of the work that we continue to do in promoting the brand, key anchor sponsorships such as the Magical Kenya Open, the Keep Kano Classic, which is a big athletics event, and many other events that we have done around the brand work. And lastly, on talent and ensuring that Absa remains a home for financial services professionals in this country, that we attract the best and we retain those that we have through training and through many other initiatives that we perform. Through this, we've won awards, and the one that we are particularly proud of is the Top Employer Award, which we have won 3 years in a row, and something that we are really, really pleased about. So that's the brief summary of the execution. I'll quickly go into the operating environment and some of the elements that we've been dealing with there. On the macros, inflation, after a period in which it was high and outside the target, has started coming down, and we are seeing improvements in that number, partly because of the economy and the fundamentals. You know, agriculture has had a good 2 years, having a positive impact on food prices, but also the MPC and the central bank have had measures around the policy rate that have brought that number back down. There are a number of other indicators right now around FX, around fuel prices, that will also, that are kind of lead indicators for future direction on the inflation number. So that's where we are on that. On the policy rate, in line with what's happening globally, the monetary tightening that we have seen across the world, the MPC took a number of decisions during the course of the year that has led to an increase in the policy rates. In the FX, we know the kind of year we had, 2023. There was continuous depreciation on currencies across the region, and the Kenya shilling was one of those. We also had a number of challenges around liquidity in the FX market. But I must say, you know, working with the central bank team, the Kenya Bankers Association, and really individual banks also operating in this space, a number of key measures were undertaken. I remember particularly the launch of the DAO CSD, which allowed foreign-based individuals and Kenyans as well to invest online in the sovereign instruments. That had an impact. The implementation of a system called BMatch, which allows the players in the market to have price discovery and transparency in the market, that then leads to greater liquidity and greater activity. We also had a few macro events, including what happened with the Eurobond and the refinancing of the Eurobond, that have had positive sentiment around the currency. So because of all that, you can see where the currency ended up in February. These are up to February, but I think if you look at March, there is still more activity and more strengthening of the currency as well. The GDP numbers continue to be resilient, north of 5%, and higher than the Africa average. And that has given us an opportunity to look at those sectors in the economy that are performing well. Agric is in double-digit territory. Tourism has had a good 2 to 3 years, and we see that continuing going forward. And because of all that, we have private sector credit going in the right direction, and this is a good lead indicator for future growth. So that's a positive that we are looking at. Now, from all of that, we've captured some of the key elements of our business. And I know Yusuf will do more detail later on, but we see continuous momentum in revenue and the revenue number growing at 19%, and the revenue number crossing 50 billion for the first time, ending up at about 54, which is a good thing. But at the same time, we are also showing NPL numbers that are still in the single digit and that are better than the industry average, as we all know. And as the chairman said, this is an increase on prior year, but it's still very well within the average and actually much lower than the industry average that we have. We've also seen good improvements around the cost-income ratio and the efficiency metrics that we show in the business. And that's an interesting number because it also gives us the opportunity where the need arises for us to invest for future revenues. So being in the 40s is a good thing, but it also gives us the opportunity in the event that we need to invest and spend a little bit more to do that. And that's a good place to be. So some fairly good outcomes on the business side, balance sheet growing well, return on equity also showing good progress. And within this environment, continuing with the momentum, both on balance sheet as well as the P&L numbers, as you will see. Let me then quickly move to the next slide, if I can. And just quickly start diving into some of the specifics, and I have one or two more of these slides to go. The brand and the work that we have done on the branding side continues to be an asset, and the chairman covered quite a bit of that, so I will not spend a lot of time, only to say that we set for ourselves some key targets around the brand metrics when we launched Absa a few years ago, and we remain well ahead of those targets in terms of where the brand is today relative to where we expected it to be. And recently, just about a month ago, we did a repositioning of the brand promise, and this whole tagline around "Your Story Matters" is a big deal for us because it's about the way we approach customers, the way we approach our stakeholders. Is not in large groups or segments, but it's about understanding every single story of our customers, whether it's a personal retail customer or a large corporate or a business banking customer, understanding their story and making sure that we tailor our solutions based on that unique story, because every business has a story to tell. We've been also innovating a lot during this period of time, and I've shared a few examples there. I won't go through each and every one. You will notice the circle, which had 3 key priorities, now has, it's been expanded into the specific details and executional areas that we continue to work on as a team. And from there, we've lifted some of the key elements. For example, the business banking, what we have launched around allowing customers to make payments, to receive payments, SME customers to receive payments on mobile POS and save them all the trouble of spending money on those very expensive hardware and POS gadgets. And this is something that is really taking up in the market. Some interest in the remittances market as well, and you will see some of the initiatives that we have done in that space. As you know, this is a big area. The remittance inflows into Kenya is a big area of interest as well. In the corporate bank, I've spoken about the regional strategy, but also we've just launched the custody business, another key area of growth, going forward. We are currently in the process of getting that off the ground. As a result of which, you will see some of the key outcomes that we are seeing. Good 50-50 balance between wholesale and retail that allows us to diversify the business well. A number of key awards that we have won in that space as well. And really in this digital space, which is about digitizing the front, how customers engage with us and engage with the bank, but also digitizing and automating the back office and ensuring that we are reducing cost as we move along. So quite a bit of activity around innovation, around automation, and creating efficiency as well. Very quickly, some numbers here, and Yusuf will cover the impact on the balance sheet. But at a gross level, 147 billion of lending into the market across wholesale and retail. The chairman lifted some key numbers out of this, around 20 billion in sustainability finance, just about the same number in SMEs and supporting Kenyan SMEs, especially women-led SMEs, which is a specific area of interest that we have. So when you see the balance sheet and the numbers, at the end of the day, we also talk about impact and which specific areas that we are focusing on. Training and capacity development in the SME market is another area that we spent a lot of time on during the course of the year, with over 10,000 businesses benefiting from this empowerment and training activities that we've undertaken. Of course, it's not been an easy time for some businesses as well, sometimes due to the macro effects, sometimes due to issues specific to those businesses. And you will see that we've, during the course of that year, helped to restructure about 2.1 billion of facilities to ensure that we are supporting our customers through this period and that we continue to work with them as well. So lots of activity in that space. Now, let me say something quickly about coverage. I already spoke about coverage and presence and distribution network within the country, which is branch, agency, ATM, cash depositor points, that whole multi-channel strategy. But we are also looking at, from a global perspective, how we can reach more customers. And one of the things we did in the year 2023 in the consumer banking space is the launch of online account opening that allows people based in the diaspora to start opening accounts and banking with us from wherever they are. And we've experienced great interest from many different parts of the world of Kenyans living out there in the US, in Europe, in the Middle East, especially the UAE, and we continue to engage with them, not just for account opening, but to build the full proposition that they require. The launch of the DAO CSD that allows them to invest in T-bills and bonds, that is one example. But there are many other investment asset classes, including mortgages and other investments that they can do. And we are looking at giving them this full proposition. And there's been a lot of interest from them as well. And then lastly is really looking at our presence in Africa and increasingly our presence globally as well from a corporate banking perspective as well as retail. So we've shaded some of the points in Southern, Eastern, West Africa. We have the New York office in the USA, which is now operational. We are based in London as well, in an office that covers that whole European region. And recently, in 2024, we opened our offices in Beijing, in China, and that continues to develop that global presence of the brand. On the colleague side, I think the chair covered this quite well. I mentioned the award, the Top Employer Award that we are very proud of. There are some statistics and numbers there. We can share them around the number of colleagues that we continue to onboard, and this is to ensure that areas of growth, especially the revenue areas, are properly covered. We also increasingly are focusing on ensuring that internal talent and the colleagues that are within Absa get the opportunity to grow. And there are many examples of people who are growing their careers both within Kenya and elsewhere, regionally, and ensuring that we are providing them with a home where they can feel that they would like to work for us. So that's another big area of focus, and we have seen great recognition, both from the market and also internally. And we track it very carefully through the surveys. There are some scores we've presented there around employee engagement. And this is done across the Absa group. And Kenya has always been among the top countries in terms of that ranking as well. Lastly, a couple of slides on sustainability, which is another area that is quite important for us. The board tracks us very closely on delivering across ESG, ensuring our financing is ESG compliant, and that through our community outreach, we are delivering across a number of these metrics. And we are sharing some of the key numbers there around what we are doing on environment, climate-based financing, and so on. So that's another important area that I wish to cover. Let me quickly move to the community slide and some of the work that we are doing there. This is a user issue, I think. Apologies. All right. There you go. I'm looking for the one that has the community work that we've done. Thank you. Thank you so much. So this is the last one really before I invite Yusuf to come up. And it's part of the ESG agenda and what we continue to work on. I really like the Computer for Schools, 65 sites enabled in 2023. I attended some of those events. It's easy to look at this as numbers, 65 schools. But when you are there and you witness young people in the rural areas who have never been exposed to technology, enjoying these facilities, getting to learn, getting to be tech-enabled, it's really powerful, and it's something we are proud of. We've done a lot of work on the environment as well, and that's something we'll continue pushing on. So, ladies and gentlemen, it's a compact version of what has been a detailed execution of the strategy. As the chairman said, it's the end of year one of a 5-year cycle of our strategy. We're just about starting the year 2 of that cycle, and we'll continue executing and driving this strategy, taking account of all the key stakeholders, our customers, the colleagues that we work with within Absa, the communities within which we operate, and of course, our shareholders. and there are slides coming down later, which I know the shareholders and the investors are waiting for quite anxiously. So thank you very much, ladies and gentlemen. Let me take this opportunity to welcome my good friend, our finance director, Mr. Yusuf Omari, to come and share the numbers, the key content for the day.
Our chairman, Charles Moshene, my boss, managing director for Absa Bank, Bona Abdi Mohammed, my colleagues in Exco, some of them who have, especially from technology, I've never seen them with ties as well. Today they're wearing ties. The media present here, and of course our investors. Good morning. Today, I remembered that we have in our board meeting next week. And so seeing our chairman articulate the strategy the way he did, and sharing even numbers without looking at any slides, just tells me that I need to prepare for next week. And then looking at the MD, also the challenge, I know the chairman has told us that we are the chief storytellers, and the MD articulating the execution. Thank you so much as well. And for that, then the chairman has mentioned that the proof of the pudding is in the eating, and that's basically what I want to share. So I will start my presentation by looking at the balance sheet, noting the comments that have been made on the bit of strategy, with some numbers that have already been mentioned, but let's dive into the details. I'm showing both customer assets, which are loans and advances, of course, together with the deposits, which fund the assets themselves. If you look at this reporting period, you see our customer assets growing by 18% to 336 billion Kenya shillings. In absolute figures, this is about 53 billion Kenya shillings growth in 2023. If we look at the makeup of this growth, you'll be able to see double-digit growth rates in all our three core businesses. So consumer, we have our business banking business, and then, of course, looking at the corporate, all of them delivering double-digit growth rates. We've seen a growth mainly coming from the secured products. We've seen our mortgage being a focus area for the government, especially when you see on the side of affordable housing also contributing to this uptick. And then also on the side of trade, also picking up in these numbers that you're seeing. And then lastly, on the side of consumer and SME. Our MD mentioned the support that we're giving to the SME sector. This number includes a substantial amount that is actually to support that sector. If you look at it just in terms of the proportion of these assets, 40% of these assets will basically be our consumer business, and then 60% of this will be the wholesale business. So you can see some form of diversification. I must say, if you looked at this maybe about 3-4 years ago, it would actually have been the other way around, where the consumer business took the lion's share. From a proportion perspective on local currency to foreign currency, the numbers here is 70-30. So 70% of what you're seeing there is actually local currency. So it gives you an idea in terms of our exposure on this. So more on the local currency side. So that's on the asset. If we move to the right side, which is customer deposits, a growth there of 19% to about 363 billion shillings, which is basically what is funding the assets growth that I've mentioned. The proportion here is interesting between consumer and the wholesale business. it's actually balanced. It's 50-50. So for the first time, we are now starting to see, especially on the wholesale side, bringing in deposits, which is able then to be able to fund the side on assets. And then on the bit of local currency to foreign currency, again, the proportion is the same as what we've seen on the side of asset. You see it's actually 70-30. 70% of our deposits being in local currency and 30% being in foreign currency. I must say 1 year ago, that proportion was actually 80-20. So you can be able to see under this reported period, the foreign currency component of our deposits moving from 20% from a proportion perspective to now what we have, which is basically 30%. If then I move to revenue, just looking at the revenue under the reported period, you see this picking up 19% revenue growth. And in there, you can be able to see the split between our net interest revenue. You see a growth there of 24%. And then on the non-funded income, which is not linked directly to the balance sheet, you see a growth of about 6%. Now, just to show you the split on the side of net interest income, a big component of this is because of what has been mentioned by our managing director, the macroeconomic environment. We saw interest rates picking up. We saw that slide. And if you look at the reference rate, which is a central bank reference rate, within this reporting period, that has gone up by about 350 basis points. So effectively, it means the interest income, the repricing that has to follow, has contributed to a big chunk on this number, with interest income picking up by about 33%. But then equally, with that deposit you've seen that I've already covered, the growth in deposit component has also meant, because of the interest rate environment picking up, the cost of funds has also picked up as well. And so if you look at the interest expense, which will share the detailed financials, you see that the interest expense picks up by about 67%. In terms of the rates themselves, our lending rate in this period has gone up by 2.3% to an average yield in lending of about 13.3. On the side of deposit, the cost of fund has also picked up by about 1% to about 3.5%, which then informs that net interest income growth of 24%. The non-funded income, 6% growth. All the lines that we monitor on this side have picked up, except from two lines. One is our trading book. When the interest rate environment, goes up, you actually see an inverse proportion when it comes to the bit on our trading book. And so we've put some drop if we are to compare year on year. So that's the first line. And the second line, you'll be able to see when you get the detailed financials, is actually our FX income, which on a year-on-year basis has actually come down by 2%. Having said that, we have some good tractions when we look at the service fee. Service fee has picked up by about 10%, and this tells you the number of repetitive transactions that our customers are doing with ourselves. So it's not just about having the current account or savings account, but they are also doing businesses with us. They are transacting through our different channels. So a good number to observe. When you look at the card fees, that has also picked up significantly by over 50% on the card side. And this tells you, the economy has completely opened, especially when we look at the period during COVID, and customers are transacting also using their cards as well. Our MD and also the chairman mentioned the subsidiaries. All our subsidiaries are reporting over double-digit growth rates, to be precise, over 20% growth rates in our subsidiaries, with our asset management, which is a new venture that we launched recently, growing by over 40%. They're at an infancy level, I must say that, but really promising when you look at the kind of traction and the period they're able to show some of this good traction. And then lastly for me on this is really looking at the risk fees, which is linked to trade. Also that picking up during this reporting period, the delta is about 11%. So a well-balanced, I must say, if you look at our total revenue, that growth of 19% being delivered both on the side of non-funded income, except for that mark-to-market loss that we recorded the drop during the reporting period. This number would definitely have been in double-digit growth rates. And then on the right side, we show diversification for the three businesses. CIB includes global markets, and in there you can see corporate picking up 22%, business banking 19%, global markets you can see 9%, and here is where we have that mark-to-market. But then from a diversification agenda, consumer and wholesale business, you can be able to see the proportion is 50-50, just to make sure that we are not having over-reliance on one side. Looking at then the side of efficiency, the side on cost, a lot has been done in this area. We've done quite a number of automation, and this one has been mentioned by both the chairman and our MD. If you see, for example, how many people we are serving outside our branches, that figure has picked up from 92% 1 year ago to now 98% of the transactions going outside the traditional branches, which of course then drives efficiency. We've seen a lot of back-end automation with investments that have been done in the recent past, total about 6 billion shillings investments, and in here it ensures we are driving efficiency. But even with that, you've seen we are still continuing to invest, especially on the side of people. With the backdrop of the macros, inflation picking up during this period, we've seen the effects, not in the current year, but of course, the reporting period that we are focusing in 2023, that picking up. And then, of course, the fiscal measures that were announced by the government with taxes going up. So with that, you see the cost picking up year on year at around 16%. And then just to dive into some of the key lines here, I think staff is a big number that you can be able to see. With staff cost picking up during this period by about 12%. The MD shared, you see the headcount in terms of the hires, over 500 people hired during that period, both temporary and full-time employees. And this is really to focus on customer-facing side of our businesses, just to make sure then we are able to grow on the top line. Of course, the other big number there is OPEX, other operating expenses. Here we have the investments in technology. So issues to do with software licenses, you'll be able to see this one is picking up. We have investments in our marketing spend during this period. And then, of course, when we are doing a lot of run, the bit on security, cash in transits are some of the numbers that are contributing to this growth. So you see revenue 19% growth rates, costs are 16%. That's the graph at the bottom there. So pushing the jaws during this period to a positive jaw of 3%, and you can be able to see the trajectory of that over the period. And then, of course, the cost-to-income ratio, we are showing a trend all the way from 2020, when this figure was about 48%, now coming down to around 39.7%, just shy of the 40% figure. If then I move to another line on the P&L, and this is really looking at the bit on risk. You see the impairment numbers picking up year on year, 43% growth rates. And really here, you can be able to attribute it to about four key areas. Number one, of course, the book has picked up. That lending that I've mentioned, 53 billion in lending, 18% growth in lending. Automatically, if you're looking at IFRS 9, it means your impairment numbers will definitely pick up. The other one is what we call the macroeconomic environment overlays that we are putting. With what we've seen in the macroeconomic environment, from an IFRS, it means we need to take forward-looking provisions. And in here, you can be able to see a figure there of about 0.9, share of R1 billion shillings. And then the third one really is the high delinquency, especially on the side of, we've seen manufacturing side, trade, and this one you'll be able to say because of FX picking up, you've seen taxes, we've seen some strain with some of our customers, so that has brought, the risk to that number. That's what we're calling the portfolio quality. And then, of course, on the side of personal, household, and SMEs, also showing some delinquency. And there we've been able to pick some impairment. The last one, which is the fourth reason on why you're seeing there, is because of FX. So that component, the 30% exposure of lending in foreign currency, the minute you have a weakness in the local currency, automatically it means then the impairment is peaking, both on the side of the balance sheet and also on the side of the income statement. So that basically what explains the impairment number that we have there. If I just expound on the macroeconomic variable, that's 0.9. We had a stock in the previous year of about 0.6. So I can give you a number, about 1.5 billion of the impairment that you'll be able to see here is forward-looking provision. Has nothing to do with name specific. It's purely just saying, here's the current environment, and with that, we are seeing, for example, interest rates going up. We anticipate that impairment will come, and so you're taking provisions upfront. On the right-hand side, we are showing the trend in terms of the NPL ratios. So you see this one picking up to 9.6%, still within our appetite and significantly among the best in the industry, with the industry at around 15%. So right level of risk that we're basically taking. And then at the bottom there, we are showing the different stages of this impairment charge. So of course, stage 3 component is the biggest at around 58%. Lastly, just on this one, if you look at these numbers, the coverage ratio that we have is around 64% on these numbers. Then lastly, just in terms of then bringing all of it together, we've covered the revenue component. So you see the revenue there at 19%, the cost picking up at 16%, then impairment at 43% growth rate during that period. Then you'll be able to see then the profit after tax, a growth from 14.6 billion 1 year ago to around 16.4, crossing the psychological, if I was to call it that way, the 15 billion mark. So you see PAT picking up year on year by about 12%. On the side of the balance sheet, you can see the numbers on assets and deposits. We've covered that. But then the important one there is the total assets, even that one picking 9% during this reported period. And then our balance sheet, for the first time, crossing half a trillion mark on that number, 520 billion shillings. If I go then to some key ratios, which is the next slide. Cost-to-income ratio, we've covered that. Loan loss ratios during this reported period, moving from 2.3 to 2.8%. We've dived into the details of why that loan loss ratio has picked up. Yields on lending and cost of funds, we've gone through those numbers as well. And then the last one, which I know the chairman mentioned, ROE at 23.7%, way above our cost of equity. So a good area, especially when we're looking at the investors who have given us their capital. On some of the key ratios that we monitor, regulatory ratios, I think without going through each of these graphs, you can clearly be able to see significantly above the regulatory limits, be it, for example, on liquidity ratio at 33.1, regulatory requirement is at 20, and that cuts across the other capital ratios. So well capitalized, very good liquidity ratios, which basically give us a very good base for investments in the future, which is what we are looking at this level. Now, before then I conclude and invite our managing director back, just in terms of the guidance, looking into this period, and what are some of the guardrails? What are some of the areas that we really focus and look to deliver in 2024 and beyond. On the growth side, looking to deliver on double-digit growth rates. So we've moved from single rate kind of revenue growth to double-digit growth rates. We've been able to deliver this in the last 3 years, and that becomes our mantra as we progress in the medium term. If you look at the efficiency ratio, targeting low 40s. This year, below 40, 39.7 is what we had in 2023. Shareholder returns, I mentioned this, targeting to be above cost of equity by at least 5%. That's another number. And then lastly, really, is on the balance sheet quality to make sure that our NPL ratios are better than what we are seeing in the industry. As mentioned, we saw the industry at 15%. Ours were below 10%, so heading in the right direction. So I think good sets of results. As I conclude, good sets of results, a very good base when we look at 2024, and even when we'll be releasing Q1 results this year, you'll be able to see this traction progressing in this year as well. So ladies and gentlemen, let me pause and invite our MD back. Thank you.
All right, thank you. Thank you very much, Yusuf. It's a very quick recap and closure from my end before we go to the Q&A session. The first slide I wanted to look at is really just that one that provides a summary of everything that we've said today. At the center there is the key strategic pillars that we continue to push. We are showing some of the key outcomes that we have shared this morning around income growth, profit numbers, balance sheet growth, which Yusuf shared. So that increase in the net interest income is not just about the pricing, but you can see the underlying asset book is also growing significantly. The efficiency metrics around cost-income ratio, and lastly, the return. On the extreme right, we've kind of outlined the execution journey that continues. And as you know, we are well into 2024, which is our second year in this strategic cycle. So that continues as we drive the results forward. Lastly, and I don't know whether I need drum rolls for this slide, is really the recommendation from the board of directors on the dividend number, which has been recommended at a total of Kenya shillings 1.55, adding up to 8.4 billion Kenya shillings, a 15% increase year on year on the dividend payout, and really among, from a dividend yield perspective, among the best in the market. Of course, that number continues to be announced. And this dividend decision, of course, made within our existing dividend policy that tries to balance between shareholder returns, ensuring that we are providing the right yield, but also balancing it with investing for the future and ensuring that the business performance into the future is sustainable as well. So those are the results. That is the dividend number, and I hope we have also been clear enough around the strategy and execution. We'll soon be going into the Q&A, but before I hand back to Charles, I know they were introduced earlier, but if I can ask the executive team to stand up, members of the Country Management Committee of Absa Kenya. This is the team that continues to execute this strategy and to help us deliver some of the results that we are looking at. And they represent many other colleagues out there in the country that continue to execute on the strategy and help us deliver. So thank you very much. Thank you, guys. Back to you, Charles.
Thank you, Abdi. Thank you, Yusuf. And also a big thanks to our chairman.
Our stories begin right here, and we never write them alone. Sometimes we write them with someone who puts our story first. Other times with someone who puts their own story first. There'll be pages we love to read again and again, and some we'll barely remember. Sometimes we feel like the hero of our story, and other times, not. There are stories of dreamers, stories of creators, stories of strivers, stories of believers, and we're inspired by them all. That's why we invite you to write your story with us. Your story matters. Our stories begin right here, and we never write them alone. Sometimes we write them with someone who puts our story first. Other times with someone who puts their own story first. There'll be pages we love to read again and again, and some we'll barely remember. Sometimes we feel like the hero of our story, and other times, not. There are stories of dreamers, stories of creators, stories of strivers, stories of believers, and we're inspired by them all. That's why we invite you to write your story with us. Your story matters.